Okay, we can start. Welcome to the webinar. Thank you all for coming. This is the second webinar of this series, and we are very excited to introduce to our audience some of the books we have chosen to have in our book list. Today we'll be discovering a book published in 2005 titled The Definitive Guide to Point and Figure, written by Mr. Jeremy Duplessis. You already have the link to the book section I just posted. A brief introduction to the author. Jeremy Duplessis pioneered the computerization of point and figure charts in the early 80s. He founded Indexia Research in 83, and the Indexia software was the first PC-based system to draw point and figure charts correctly and clearly. In 2001, the company merged with Updata PLC in London, where Jeremy is now head of technical analysis and product development. He's a fellow of the Society of Technical Analysts in the UK and a member of the American Market Technicians Association. He's a holder of the Chartered Market Technician designation awarded by the MTA. He also sets the point and figure syllabus for the International Federation of Technical Analysts. It's an honor to have with us someone who has taught technical analysis and in particular point and figure techniques to thousands of professional traders and investors over the last 20 years. Now a few words to the book. Point and figure charts are one of the oldest and greatest secrets of the technical analysis world. Mainly used by professionals, this charting method has been unfortunately overlooked by many traders, and this book has the capacity to change that situation. Many people think point and figure is outdated or complicated, but this book thoroughly demystifies these wrong beliefs. There are also people who have always liked point and figure, but never really understood its intricacies. Again, this book solves the gap, providing the reader with a detailed explanation of the technique. It also covers the makeup of the chart patterns, why they are created, and their interpretation, through how readers are encouraged to understand point and figure charts from first principles, rather than just remember the names of patterns. All this is illustrated with numerous color charts and also observations from years of trading experience. According to Mr. Duplessis, point and figure charts are the voice of the market. This book helps you listen to and understand that voice. The subject is explained as an evidence-gathering procedure that leads to a successful trading method with accurate entry, stop loss, and targets. In some way, this is not only a book on point and figure, but a general book on technical analysis, and more specifically on price action exemplified through point and figure. The author starts giving extensive coverage to the original one-box reversal method before moving on to the more modern methods. The first chapter is about chart construction with a step-by-step examples, really made easy. The reader will be surprised at how many different methods there are to construct point and figure charts and their characteristics. Throughout the book, Jeremy spends much time on the subtleties of the 1, 2, 3, 5 box reversals, how to analyze, interpret, and trade each method. Few trading books you will read of such diligence. All explanations, charts, and diagrams are crystal clear, simply written, and easy to understand. Further, the explanation of how to use point and figure charts to project targets and calculate risk-reward ratios is the most comprehensive ever seen. This is done step by step, column by column, through sample charts, pointing out exactly what the author is thinking at every step of the way to analyze a point and figure chart. There is also a detailed discussion of optimizing techniques, which I think is a valuable resource for our Forex audience. In a few minutes, we will have the chance to ask Jeremy how point and figure charts can be used in currency trading. Lesser known and more advanced techniques such as the use of moving averages, parabolic top and reverse, and Bollinger Bands, or on pointing figure charts are also discussed in the book. Plotting indicators such as the RSI as a P&F chart may represent an edge if you are trading with oscillators. I personally read this book because it is one of the books for the MTA examination, but immediately I felt very interested in this charting method. I feel that we are missing an important piece of knowledge if we don't know about pointing figure. It's the logic behind its construction and the pure price action reading that can result so enlightening for our trading. Even if you don't pretend to use pointing figure charts, it's worth doing the intellectual effort to understand them. For some of you, I'm sure this book will make everything click and change your perceptions of price charts forever. The book definitely justifies the title. It has all aspects covered and explained in detail. Just to finalize, I have to say the book isn't merely a brochure for the company and software. Besides of the introduction, it is not mentioned in the text. That being said, I think it's also worth mentioning that there aren't many other software providers that so extensively integrate point and figure and the ability to include the tools and indicators discussed in the book as does Updata software. For that reason, I think it's difficult not to stay unbiased. In any case, this webinar is about the book, and I welcome Mr. Jeremy. Thank you very much.
Gonçalo, so where shall we start? If I can just give some of the rationale behind using point and figure charts. It's the one chart that shows you the battle that is going on in the market between the bulls and the bears, the buyers and the sellers. The bulls push up a column of X's, the sellers push down a column of O's, and that's what we look for all the time. We look to see who's in control of the chart at any stage. I also look for things like reassertion of control. So if the bulls have taken control, the bears have taken it back, it's important that they have that power to do that. If you like, I can show you a chart of Eurodollar, if anyone is interested. Hopefully this will work. This is a 100 pip chart, so each X and O is worth 100 pips, and it's a 3-box reversal chart. And one of the advantages of 3-box reversal charts is that the trend lines are objective. They're all drawn at 45 degrees, so at any stage you can see what the trend is. And if I look at this chart, it tells me it's in an uptrend. I may not agree with that, but I can't argue with it. That's what I like about 3-box reversal charts. You can see that we have a strong 45-degree uptrend line here, and these lines inside I call the internal lines, and those also provide support in this case. You can see that I've drawn 2 targets on this chart, and because this is a 100 pip chart, this is a fairly long-term view. So I'm taking quite a long-term view on Eurodollar, and you can see that the thrust from the low in June 2010 gave a target of 156. The thrust from this low here in December also gave a target of 156. And so we have to believe that that is our upside target for the euro, provided the trend stays in place. One thing with point and figure charts is that you can change your time horizon by changing the size of the box. So for example, if I now go down to a 50 pip chart, each X and O is worth 50 pips, I see a slightly different picture. Once again, I can see the strong uptrend line there. I can see the target, so I can see the thrust of this area in January gives a target of 156, which is the same as we saw on the previous chart. But you can see here that we've made 2 little tops, and so I need to put downside targets on here as well. We're in an uptrend, so we don't think that the downside targets will be achieved. but I need to be aware of those. And so we've got two targets of 133 and 128 on the chart. But we're in a trend at the moment, and that's the important thing. What would cancel these downside targets would be a move above this level here and above this level here. So once it breaks above those levels, then those targets of 133 and 128 are negated. I can go even shorter time horizon by doing two things. I can change the time frame of my data. So instead of using daily data, which I'm using now, which is taking one price per day to plot the point and figure chart, I could move to 15-minute data, which obviously takes 4 prices per hour to plot the point and figure chart. And this is giving me a much shorter term view and allows me to change the box size down, in this case, to 10 pips. So this is a very short-term chart that I'm looking at. Once again, you can see the 45-degree trend lines. The euro on this chart is in an uptrend, and it's been in an uptrend on this chart since about the 19th of July. It was in a downtrend for about 2 weeks. What's interesting are the targets from here. I have a little short-term target of 143, which we achieved. We had a horizontal target, and we do that by counting across the base of the pattern of 144, which it achieved pretty much exactly. And then a little bottom here gives a target of 145, which is the price that we've hit today, and we're just pulling back from that. Targets above that, I have a strong thrust from this column here, giving me a target of 149.6, and a horizontal target from the big base pattern here of 148.6. So on the shorter term chart, euro is still in an uptrend. I can go even shorter term by going to a 1-minute chart. And here we have a 1-minute chart. Again, it's a 10 pip chart. So I'm using the same size box, but I'm using now data coming in, recording every minute of price changes. And once again, you can see that the trend lines define out the moves. We're in an uptrend at the moment. We've got thrusts of 144 that we've hit exactly, 145 we've hit exactly, and then the big thrust, which we saw on the previous chart, of 146. So provided the euro stays above this 45-degree uptrend line, we're still in line for getting to those targets of 146. I have another one here. This is another 1-minute chart where the box size, each X and O, is worth 1 pip. So this is a very, very short-term chart, and you can see that it keeps changing all the time. But if we just look at the target from this low here, there's a potential of 145. As you get shorter term, so you will find that the targets don't get achieved exactly, because the trend is changing so often. But it's very important to see the chart in this short-term time frame to see what's going on. So at the moment, this is in an uptrend. Someone asking how you trade it. It's in an uptrend. You're above the 45-degree line. You would be long at this point here, and really a close below this level here would just stop you out of that short-term trade. So if I just put a line on here, a close below there would stop me out of that trade. Now it's moving backwards and forwards because the price is changing during the minute, but at the end of the minute, the O will get fixed. And if it closes below there, you would stop out of that trade and then wait for a breakout again. The question is, why would I use 15-minute charts if I've got data for 1 minute? Well, 15 minutes gives me a slightly longer term time frame. You can change your time horizon in 2 ways with a point and figure chart. You can do it by changing the time frame of the data, in other words, moving from daily to hourly to 15 to 5 to even 1 minute. And you can change the time horizon by changing the box size. I found hourly charts are very good and 15-minute charts are very good, because what point and figure is doing is it's trying to get rid of some of that intraday volatility to try and give you a clearer picture of what's going on. So there's no problem in using 15-minute data and not using 1-minute data. 1 minute is very short term, and a lot of people don't want to be that short term with their charts. And so that's the reason for using 15 minutes. Yes, older targets are really important. I always draw the older targets because I need to see whether the characteristic of the chart is showing that targets are being met correctly. If I look back in history and I see that the targets are working really well, that gives me confidence for the targets in the future. No, I don't know MetaTrader 4 at all, I'm afraid. Tick data is fine. If you are trading very short term, then certainly a tick point and figure would be very good. The difficulty with tick is that it's quite difficult to get long histories on tick data because one doesn't know how many ticks there are per day, and it becomes a huge amount of data. But if you're starting your chart in the morning and you're drawing a tick chart, and that means plotting every single price change, that's a very good way to plot a point and figure chart. And if that's the case, I would move to a one-box reversal chart, which I don't really have time to show today because a one-box reversal chart shows me very important information. If we look at this chart, you can see that it's building up for a triple top breakout there. If it breaks out above a triple top, that's quite a strong buy signal in point and figure terms. And if it fixes above that, and it's just ticking above it and going below at the moment, if it fixes at the end of the minute, that would be an indication to add to a position. So it has fixed above that now, so that would be an indication to go with that, hoping that you're going to get to the 145 target. How do I get the target? The software calculates the targets automatically for me, but essentially it's the thrust column times the box size times the reversal added to the low of the pattern, or added or subtracted from the high. So the advantage is that the software will do it for me. Let's have a look at cable now. Cable, again, it's a long-term chart. It's a 100 pip chart. It's 100 pip by 3. It's in an uptrend. So again, I can't argue with it. I may not agree, but it's in an uptrend. I've got two thrusts. I've got a thrust from the April 2010 low of 189, and I've got a thrust of 181 from the November 2010 low. Because we made a little top here, the 152 downside target, I have to have it on the chart just to remind me that there is a potential downside, but I'm not interested in that really unless it breaks the trend line. Moving slightly shorter term on that, this is now a 50 pip chart. Again, it's in an uptrend. I've got a target of 181 there, and because we've made a top here, I have a downside target of 1.5. But we're in an uptrend, and you can see that the internal trend line here was touched, and that's reinforced it. So that's quite a strong support area for cable. Moving to a 60-minute chart. This is an hourly chart. And when I draw a chart, I look at it and I look to see whether it's telling me what I want to see. So is it showing me the trends that I'm interested in? If I'm interested in short-term trends, then I want the chart to show me the short-term trends. If I'm only interested in long-term trends, then this chart is no good for me. So you have to look at the chart and appreciate the chart before you say, that's the one I want to look at. And here we have a 10 pip chart, 3-box reversal. Now what's interesting is that the 162 target was hit exactly. The price pulled back. Our next upside target is 164, which is what we're heading for at the moment. And that target came from the low in July 18th. There is a big base pattern here, and we don't just establish targets from thrust columns, which I've done for these vertical ones. We also establish them from basing patterns, and this is quite a big basing pattern here for a short-term chart, and that's giving an upside target of 168 at the moment. Looking at a 1-minute chart, of cable. You can see there's a whole lot of targets here. Now, what's interesting about this one is that I have a target here of 164.44. That target comes from this thrust column, but because the price hasn't broken out above that thrust column here, that target has not been activated. So normally I would take that target off my chart because it's not an active target, and it's important not to have targets on your chart that are not active targets. The downside target here, 163, is active, and the target here, 164.19, is active. And that's just been activated here, and so we're in an uptrend. We would expect that target to be, and if I can just put a 45-degree trend line on there. So on the pointed figures, we draw trend lines at 45 degrees. You cannot do this on any other type of chart. You can't do it on a candlestick chart or a bar chart or a line chart, because as you change the aspect ratio of the chart, so the 45-degree line will go through different positions on the chart. Point and figure is constructed on a square grid, and so consequently, if we look at the grid, you can see consequently 45-degree line goes through the corners of the boxes. The question is, do I set the targets? No, the software does it automatically for me. There's two ways to do it. I can either just hit a button saying automatic targets and it'll put it on for me automatically, or what I tend to prefer is I tend to move and place the targets myself manually on the chart. So if I move this button here, you can see that it's putting the targets on the chart automatically for me. So that's a 1 minute on cable. Euro Swiss, well, no arguments about it. This is a 5-minute chart. The euro's in a downtrend against the Swiss. On this chart, would you go long after the blue line? Sorry, let me just go back to the previous one. Well, I would probably already be long because I'm in an uptrend. But yeah, I think if it breaks above that line, that's a pretty important break, that blue line. And so yes, you would want to add to a position there. Yes, there are strict rules about calculating targets. Firstly, the vertical targets can only be taken off tops, bottoms, mini tops, and mini bottoms. So I don't know whether you can see the arrow here, but for example, that is a mini bottom that allows me to calculate a target. That's a mini bottom, but here is not a mini bottom. So there are certain places where you can calculate the targets from. So mini tops, mini bottoms for vertical targets. For horizontal targets, it has to be a basing pattern. So here's a basing pattern here, and I could calculate a target across that pattern there to give me a 164 target. The targets that haven't been activated, if a target hasn't been activated, the software won't put the target on the chart. So that target, the 164.4 here, I wouldn't see on the chart. Clustering is very important, as we saw with the euro and cable. If I go back to the first euro chart, I've got two targets here from two completely different points on the chart at two completely different times, and they've both come in at 156. That does reinforce that as a possible target area. So yes, clustering is very important. On average, will the target be 50 pips or more? Well, not necessarily. The targets are to do with thrust. The whole rationale behind the vertical targets is the strength of the thrust off the bottom or off the top. The stronger that thrust, the greater the target is going to be. Is there anybody that I haven't answered? And they're going so quickly. If I haven't answered your question, the best thing is to ask it again. Let me just see. On average, will the target be around 50 pips more? Okay, I've answered that one. The target really depends on the thrust. For example, here is a very small thrust and it only gives a target of 132. So it was a very small thrust off the bottom there, and that was the target, and there's nothing you can do about it. That is the target. Here's a very big thrust off a high, giving a big downside target. So the thrust really defines the targets. As far as risk-reward ratios are concerned, there is obviously a risk-reward ratio associated with every target. I don't use them every time. So for example, this target here of 156, I could show the risk-reward ratio for that target. And unfortunately, I've got so many on the chart here. So for that target of 156 there, let's assume now you want to go into this. What it's saying to you is that if you use 139 as your stop, your risk-reward ratio is 1.9. If you're going to use 134 as your stop, and that means going below 134, then the risk-reward ratio is only 1. So quite honestly, you wouldn't either not take the trade, or if you did take the trade, you would not put your stop at that level. And that's the advantage of the risk-reward ratios. They tell you really what the risk is of the trade, the risk-reward ratio. So it's the number of points of reward that you get for every point of risk that you take. That's how the risk-reward ratios work. Let me just turn. I don't have them on very often because they get you get quite a lot of them on the chart. Well, how do you select columns for horizontal counts? To select columns for horizontal counts, if I'm doing a bottom pattern, I'm looking for a column coming into the pattern. So let's just say this is a bottom pattern here. I'm looking for a column of O's coming in, and I move across to a column of X's coming out. So I'm looking across the pattern. The pattern has two walls on it, a wall coming in and a wall coming out, and that's how I do the horizontal counts. Have I back-tested vertical counts to give you a trading edge? I haven't, because I don't expect every single target to be achieved. But if a target is not achieved, it tells me something about the strength of the trend. So if I'm in an uptrend, I expect upside targets to be achieved. I don't expect downside targets to be achieved. So if during an uptrend there's a little downside target and that target gets achieved, that tells me that the uptrend is starting to weaken. Also, if I'm in an uptrend and a target gets cancelled, an upside target gets cancelled, or an upside target is not activated, that also tells me that the uptrend is not as strong as I thought it was. So I don't expect targets to be achieved to the last decimal point. What it tells me is how far away from where I am now is the potential price move. So I don't care whether the target's 181 or 189 or 193. It tells me that I'm sitting at 163 and the target is sufficiently far away to take a trade. And if those targets are achieved, that just strengthens that uptrend. What is the success rate of point and figure? That's a very wide sweeping question. I think the fact that point and figure has been around for about 130 years means that it's a very powerful technique. It's used very much by our clients who are trading energy. It's used by clients trading fixed income, foreign exchange. It's used by everybody, really. And it's not a trading system. That's what you have to understand. It's just a different way of showing a chart. Remember, we've got no time scale on a point and figure chart. So the chart only moves when the market moves. If the buyers are in the market, a column of X's rises. If the sellers are there, a column of O's comes back. You can't see that on any sort of chart. And so I can't tell you about success rate. I've had some great success and I've had failures. But the one thing about it is it tells you all the time what trend you're in, where your stop levels are, and I think that's important. Would I use a 1 minute point and figure to show clear support and resistance? Yes, I would. I think that's a very good idea. I'm not suggesting to anybody that they should use point and figure exclusively. I tend to, but then I'm a bit eccentric. I do think that if you've been used to using candlestick charts and you're using a 5 minute candle, it's a good idea to have a 1 minute point and figure chart next to it, because the advantage of point and figure is that it's taking the price and it's putting it into compartments, into boxes, so the support and resistance shows up much better on a point and figure chart than it does on a candle chart. So yes, I think you should use them together. Does it work on cross pairs? It works on anything. When I draw a point and figure chart, it doesn't know what you're drawing it on. So I could be drawing an index or an ETF or a fixed income or a currency. It really doesn't matter, and it makes no difference whatsoever. If I took the name off the charts, you would look at this chart and you wouldn't know what it was. No, you can't do Elliott wave counts on a point and figure chart because Elliott wave relies on time in the counts. So it would be quite difficult, and I think that's a great advantage of point and figure charts, that you can't use Elliott wave. Which link I got? PNF chart for Forex. I don't know how to answer that. You have to manage risk properly. Wolfgang, I absolutely agree with that. You have to be aware that every signal you get isn't going to be correct, and what you have to know is when you've taken that signal, in other words, a triple top breakout, you have to know what would take you out of that position. How would that chart change? And the advantage of point and figure is that when a column of O's goes below a previous column of O's, that's effectively a sell signal. So I'm not saying you take every single signal, but certainly if that happens, it then tells you that the chart is now in bearish mode. And do you want to remain long when the bears are in control? That's the thing about it. You can see who's in control of the chart all the time. Different time frames will give different targets, yes. So I usually start with the longer term time frames on the daily chart. Those give me the longer term targets. And then you move slowly down and you get different targets. Because of the way the point and figure is constructed, you're never going to get exactly the same target on a 60-minute chart that you would get on a 1-minute chart. But on a 1-minute chart, I'm looking at very short-term targets. How do I integrate the time frames? Well, what I believe is that you should have 3 point and figure charts open. You choose one to place your trading on, so that may be a 5-minute or a 15-minute, and then you choose one either side. So you would have a 15-minute chart, maybe with a 1-minute chart to just tell you what's going on inside the 15-minute chart, and then maybe an hourly or a daily chart to give you the longer-term picture. So you don't worry about conflicting signals on different charts. You're only going to trade off one of those charts. You're going to use the other ones to give you more information. For example, if you're in a 15-minute chart and you're in a column of X's, and that column of X's is breaking out, you may want to look at the 1-minute chart and say, well, actually, I need to wait maybe another hour or two because it looks like it's correcting very short term. So you use the other charts to look inside the bigger ones. What new things have I learned since I've written the book? What I've learned is that adding indicators to point and figure charts is very, very powerful. For example, I could here add a MACD to the point and figure chart. And what that does is it gives me more information about the point and figure chart. So now I'm being able to use indicators that were actually only unique on candlestick charts, and you couldn't use them on point and figure chart. But on a point and figure chart, I calculate those by calculating columns. So this is a 1226 column MACD rather than a 26-day MACD. And so that's something that I'm spending much more time on, and it tells me more about the point and figure chart. It tells me whether it's overbought or oversold. Yes, I do. I like volume. Sorry, I'll come to your volume question in a minute. I'm skipping out a few here. Bullish Catapult is a very powerful pattern. When you're looking at patterns, what I look for all the time is what I call reassertion of control. And that, the simple example of that is that if you're in a boxing ring and you get knocked down and then you stand up again, that gives you a bit more strength. And so a bullish catapult is exactly that type of pattern. What it is the price breaks up above a triple top. It then pulls back into the pattern, and you think then it's not going to continue. The bears take control. The bulls then turn it around and push it back out of the pattern again, giving another buy signal. That's a very strong pattern, and that's reassertion of control. So the bears took control, but the buyers took the control back again. So all the time, I'm looking to see who's in control, who's been knocked down, who's managed to stand up and keep going again. The figures at the bottom of the charts are just the rough idea of where the years are, because there's no time on a point and figure chart. It just gives me a rough idea. So that's 07, 08, 09, and so on. And you can see that they're not obviously equally spaced. Bollinger Bands, I use Bollinger Bands and moving averages on point and figure charts. Bollinger Bands tell me two things. They tell me the strength of the trend. So if the point and figure is hugging the upper band or hugging the lower band, that tells me that it's in a strong up or down trend. I also look for the squeeze, where the point and figure chart squeezes together. Let's just put a Bollinger Band on here. I always use 10 columns for the Bollinger Bands. So there you can see that we had a little bit of a squeeze here before the price broke out. So yes, I like Bollinger Bands quite a lot on point and figure charts. Moving averages as well. You can use moving averages on point and figure, where the moving average period is a number of columns. So you would draw a 10-column moving average or a 20-column moving average. And it's just an alternative to using 45-degree trend lines. Volume, I'm a great fan of volume. So yes, I use volume on point and figure charts, obviously not for foreign exchange. I use volume, horizontal volume, which tells me the volume at each level. So at each level of the chart, I can see the volume at those particular price levels, and I use column volume. So I want to see if I'm getting a second column of X's rising, I want to see that there's more volume in that column than there was in the previous one. So yes, I use that all the time, and I do use on-balance volume. I think for equities and even indices, on-balance volume is very important to use, and particularly on point and figure charts. Can the MACD window be shown as a point and figure chart? You can show MACD as a point and figure chart, but I don't see any point in doing it. If I'm going to draw a point and figure chart of an indicator, it needs to be an indicator that hasn't already been smoothed. If you take a MACD, it's already a smoothed indicator because it's calculated on moving averages. So the point and figure chart won't really show up. Remember, a point and figure chart needs lots of action in order to create the patterns, and you don't see that on a MACD. So if I was drawing an indicator of a MACD, a point and figure chart of an indicator, it would be something more like an RSI or a momentum or something like that. And in fact, I like point and figure charts of on-balance volume as well. Bullish percent. We're not going to get into that because we're talking FX, but yes, bullish percent is very good on point and figure, and what that does is it measures the percentage of stocks in an index that are on a buy signal. I think I've probably spoken for too long now. Someone else has to ask some more questions. So if we just go back to this 1 minute chart, you can see the euro just pushing out of this very complex pattern here, and that allows me now to actually put another target on the chart from that little low there of 145. In point and figure, you often see volume very low before a breakout of a triple. I would be suspicious if the volume was low on a triple top breakout. And so that would make me treat that particular triple top breakout with a little bit of suspicion. So the third X column in the triple top breakout, I really need to see volume behind it in order to confirm that that's a good breakout. Well, I don't really want to show any volume examples because we're talking FX at the moment, so and FX doesn't have any volumes. Yes, Gonçalo's got a really important point that he made there, is that all point and figure patterns start off with a simple double top or a double bottom. So that's a column of X's rises, a column of O's comes against it, and another column of X's rises above and breaks out. That's called a double top buy. Every other pattern is a combination of that pattern. So you don't have to learn patterns in point and figure charts. Really what it's about is the more times the price comes up to a particular level and the more times it gets thrust away from that level, if it does eventually break out, that breakout becomes stronger. So complex patterns like the one that we're looking at on this 1 minute chart, you can see the price has come up to that 144.83 level a number of times and has finally managed to get through there. And that's what you can see on a point and figure chart. So just going back to the question of volume, obviously not on FX, but every other type of chart, whether it's futures, indices, equities, volume is pretty important. A futures chart. This is the mini S&P. I guess I could have done gold as well. So maybe I should do gold instead. So here's gold. This is a $15 point and figure chart on gold. There is the 45-degree trend lines, and if I just put some automatic targets on, you can see the targets are pushing to 1890 and 1995. This is a long-term chart. It's a $15 chart. I could, for example, move down to a 60 minutes. Hopefully I get the data quickly. So here's a 60-minute chart. Again, I've put on the trend lines. The targets are there automatically for me. 1586 has been achieved. Our next upside target is 1638. So I'm looking at a much shorter term picture now. The box size is only $2. I could change the box size down to $1 to give me a shorter term view. And you can see it, the shorter term view says, look, it's like a top has been made. It's broken a quadruple top there. I've got a downside target of 1594. All the time, you must be aware of what your time horizon is. It's no good if you're investing for your great old aunt and you're looking at a 60-minute $1 chart. So you need to know your time horizon before you can decide which chart to use. And this is very short term at the moment. All the charts I've drawn so far have been based on the close at the end of the time frame. So on the daily chart, it's the close at the end of the day. At the hourly chart, it's the close at the end of the hour, and obviously a minute at the close at the end of every minute. I tend not to use high-low data. I tend to use close data because my argument is the only reason that high-low data was used was that they wanted to use daily charts and they didn't have the intraday data available. So they decided to use either the high or low at the end of the day in order to try and simulate what was going on. The problem with it is that it doesn't really simulate it because you can't use the high and the low when drawing a daily chart because you don't know which came first. If you knew whether the high or the low came first, then fine, you could use them. So you have to use either the high or the low. I would prefer, if I was really that involved, to use a 1 minute chart on close data, and then I know exactly the path that the price took during the day. And in fact, I could use a 1 minute chart on high-low data if I really wanted to, but I think closed data is quite sufficient. High-low charts tend to give you a slightly shorter term time frame. So there are times when I'm looking at an index, for example, on closed data, and I say, I wonder what it looks like on high-low data, and that gives me just a slightly shorter term time frame, and the trends tend to change a little bit more often with the high-low data. But if you have intraday data available, quite honestly, you don't need the high-low data. I'm not sure I understand your question. Does PNF serve for counter-trend strategies as well? I mean, point and figure is very much a trend-following technique, and so we go with the trend. Have I misunderstood your question, Gonçalo? 100 pip FX chart is quite a long-term chart. So, I mean, you know, you wouldn't look to day trade with a 100 pip chart. You know, that would be something that that, you're looking much longer term. Some volume. So on the futures here, for example, this is one of the volume types of charts that we do, where it shows you the volume at any particular level. So, yeah, ride the trust till it bends. That's exactly right. So this tells me where there is volume at particular levels, and I expect therefore to be support or resistance at those volume levels. I can also put volume at the bottom of the chart, and so that gives me now that just tells me the volume for every X and O column, and that's quite important. You'll notice here there's a lot of volume on that downside column there, which is bearish if you think about it. And then obviously I can do an on-balance volume chart on that as well. So let me just take that one off. The problem with point and figure is that they start crunching up when you start adding indicators. But you can see here that the move to the new highs in gold, actually there was not a lot of volume behind the futures when it did that. Do counts tend to correlate with fib levels? Actually they do. I have a very good friend that is a Fibonacci and Elliott wave crazy, and he's often telling me that the targets come in at exactly the same levels that he's come up with from his fibs. I can't tell you whether that's by design or whether it's by coincidence. The two techniques are completely different, so I can't imagine why they would come in at the same levels, but maybe that's something that's behind the chart that's doing it. You could build a bullish percent for FX, yeah. I think that if you took all the FX rates against the euro, for example, you could build a bullish percent, and that would be the bullish percent for the euro. You'd have to just make sure you get them all the right way round, obviously. But yes, I think that would be very, very interesting indeed. So you could build an FX a bullish percent for the dollar, for example, if you wanted to. You've noticed a correlation with Ichimoku cloud levels. Oh, well, David will be very pleased to hear that. In what way do you expect a failure of a breakout with a low volume? Yeah, I think that the one advantage of the volume is that I'm expecting, it's no different from any other pattern. If you were looking at a triangle breakout on a candlestick chart, you would expect there to be increased volume at the breakout. That's what I expect on a point and figure. And so if I see a breakout and the volume on that column is very low, then that breakout makes me suspicious. Now, it may be that it breaks out one box on low volume and then the volume increases after that. So remember that the volume will increase as the column keeps going. So yeah, volume on breakouts, I like to see a higher volume on the breakout. Well, firstly, Pratash, I don't draw any point and figure charts on weekly time frame. The maximum time frame you would use is daily. If you want the very long term, you increase the box size. So I would never use a weekly one. But let's just go then to a daily gold chart. Let's just do a $10 chart, and you can see there. Look at this target here of 1010. That was achieved exactly, and then the price came back. 1200 achieved exactly, and the price came back. 1300, the target was exceeded. Now, if a target gets exceeded, that's really bullish action, and you would expect it to keep going higher. So the targets are pretty good on the charts. Let me just put some so the target from the bottom, 590. So there was a top here, and there was a downside target of 270, but that target got cancelled, and that just reinforces the uptrend. So here's another target of 780 exceeded. Here's a target of 670. It didn't quite get achieved, but what was interesting is that when gold came back, it touched the 45-degree trend line. That 45-degree trend line has been in place since May 2001, and the price came back and touched it and triggered away again, giving that 1010 target. As far as horizontal targets are concerned, if we take the base here, there's a target of 1100, and in fact there's an even bigger base all the way across here, giving a target of 1640. So these are targets that were made in 2002, 2003. So yes, I always look at the old targets to see how they've been achieved. I don't really have time to go into one box reversal charts. I'll just draw one for you. They require a lot more skill. This is a one box reversal chart on gold with a $10 box. And yes, I think that everybody should use one box reversal, because what it does is it helps you to see what's going on inside the three box reversal chart. No vertical targets on a one box reversal chart, unfortunately, only horizontal targets. Is that it? I've exhausted everybody, have I? Don't embarrass me now, please. What are my preferred patterns? Catapult, I think, is the pattern because it shows reassertion of control. It's a triple top breakout, a pullback into the pattern, and then another double top breakout after that. That's an important pattern. Of course, it could be a top pattern as well. I probably shouldn't do this, but that's where you can go and have a look. If you're looking for good point and figure, then I'm afraid that I can't think of anything else that is as good as Updater, because everything is automatic in the targets and the counts and everything. Yeah, I'm all done here really. I think we've exhausted all the pattern. I'll do the dollar index and let's just see what that turns out to be. Let's just do it on a three box reversal. So dollar index, those are the sorts of targets we're looking at there, 65, 57. The thing is looking pretty nasty really. If I look at it on a one, you can see even 47. So dollar is in a serious downtrend at the moment. Oh, definitely used for day trading the mini futures, absolutely. I'd be using a 1 minute chart or maybe even a tick chart to do that. So most definitely. And remember, point and figure charts came from day traders. The people that were standing on the floor or in the bucket shops, they were the ones that were recording point and figure, the numbers down to construct the point and figure chart. So it is very much a short-term charting system. Okay. I might need a whiskey actually after this. The 96 is valid at the moment, but it's going to get cancelled if it goes below there. So a break below 72 cancels that upside target. I'm pretty much done. Thanks very much.
All right. Thank you very much, Jeremy. Thank you for all coming. I think it was a very refreshing session. It's always good to have different techniques, to learn about different methods, and this was one of the sessions that brings us a fresh air into our huge database of archived sessions. There are very few moments we had to talk on point and figure, and none of them so deeply as during this session with Jeremy Duplessis. Thanks again for your time, Jeremy, and we hope to see you soon with us again in the future. Who knows? And for our audience, also thank you very much for your time and to be with us. Thank you.